Is XRP on the verge of a major breakdown? That's exactly what we're going to talk about today, because over the last few days my feed has been extremely negative, especially heading into today. A lot of people are saying that today is the deciding moment not just for XRP, but for the entire crypto market, with claims that a massive crash could be right around the corner due to a major event taking place. Today, I want to walk you through my full perspective on this. Because historically, when an event becomes overly hyped and sentiment leans heavily in one direction, whether bullish or bearish, the market often does the complete opposite. Right now, the total crypto market cap is sitting around $3.11 trillion. The fear and greed index is hovering near 41, which puts us right in neutral territory, but fear is clearly starting to creep back in. Bitcoin is trading around $90,900, while XRP is sitting just above $2.13. But the most important thing I'm watching going into today's decision isn't crypto alone, it's the S&P 500 and the broader stock market. If we take a look at the S&P, it's actually been performing very well. Just looking back to Wednesday's close, we saw a new all-time high before price settled back near current levels. RSI is holding its moving average, which is a positive sign, and bullish momentum has been slowly building. That said, everything could change today. There are several catalysts lined up that could determine the next major move across markets. Ideally, I want to see the S&P continue the uptrend we're currently in. Longer term, I'd like to see a much more impulsive move higher, potentially towards 7,000 plus, but I don't expect that to happen today. And if the bearish narrative plays out, we could see a sharp pullback instead. Looking at Bitcoin, it's holding up reasonably well. Nothing explosive, but structurally this is important. Bitcoin remains in bullish structure. We have higher lows, and after taking out previous highs, we also have higher highs, which is exactly what you want to see. The key thing I'm watching today, especially on lower time frames, is whether Bitcoin can continue printing higher highs. On the 4-hour chart, we're starting to see the formation of a lower high, and I don't love that. That said, I place more weight on higher time frames like the 3-day and weekly, rather than the 24-hour alone. On the daily, the most important thing is maintaining the current higher low. If we do see downside today, I'm watching $88.04 K as a potential bottom for Bitcoin. That level aligns perfectly with previous resistance flipping into support. On the weekly chart, that support sits slightly higher around $88.07 K, but either way, that zone is critical if we get negative price action. Now let's talk about XRP. If the market turns bearish, XRP could retest its gap lower. That's something I'm closely monitoring. However, it's also very possible that we've already put in a local bottom. XRP recently retested major resistance from early December and so far appears to be holding. It's still early, but if this low holds, we could be looking at a move back toward previous highs. If the broader market does roll over, the main downside zone I'm watching for XRP is roughly $1.94 to $2.04. There's heavy liquidity in that area, strong historical demand, and it lines up with price action from both 2024 and 2025. On the weekly chart, the most important thing is continuation. If structure holds, XRP remains in a healthy position. If not, we reassess. So what's the big catalyst everyone is worried about? The main topic dominating discussion today is the Supreme Court ruling on tariffs, alongside the December jobs report. Media outlets have been pushing headlines suggesting that today's developments could significantly shake the stock market. CNBC, The Street, and others are all emphasizing potential volatility tied to unemployment data and the tariff ruling. We've seen posts claiming that if tariffs are ruled illegal, all collected tariff revenue would need to be refunded, potentially creating funding issues for the U.S. government. Personally, I don't buy into that narrative fully. Would we see an initial drop if tariffs are struck down? Absolutely. Could markets chop for a bit? Sure, but I don't believe this leads to a catastrophic collapse. People forget that back in 2025, tariffs were one of the biggest drivers of fear in the market. Every time trade war headlines surfaced, both stocks and crypto sold off hard. If you go back to early 2025 on the weekly chart, tariff fears intensified, and the result was a massive market crash. That drawdown lasted about 48 days, and it took roughly 125 days total to reclaim prior highs. So yes, tariffs scared markets back then, but that's exactly my point. Tariffs were already viewed as bearish. Now suddenly, everyone is acting like removing them would be the end of the world. That doesn't add up. Even prediction markets like Polymarket are showing around a 73–76% probability that tariffs are ruled illegal. But that doesn't mean tariffs disappear forever. It only blocks the current legal framework. The president still has alternative methods to impose them, they're just slower and less aggressive. If tariffs are removed, government revenue may drop, inflation pressure could ease, and rate cuts could actually become more likely over time. That's not purely bearish. Yes, there's near-term uncertainty, but markets have navigated far worse. Right now, fear is being amplified far beyond reality. Every economic event gets overhyped: FOMC meetings, CPI prints, jobs reports, and most of the time, the market resolves in the opposite direction of the crowd's expectations. Stepping back and looking at the bigger picture, I still believe this market has significantly higher levels ahead. A lot of people are calling for a full bear market. I see those comments every time I post on X, but when you analyze the data, it doesn't line up. Take XLM as an example. Its last major high was in November 2024, over 413 days ago. That's not bull market behavior, that's a prolonged consolidation phase. Historically, true crypto bear markets last closer to 600 days. If we were actually in one, we'd expect final lows by mid-year, and I just don't see that happening. Especially not with increasing institutional adoption, improving liquidity conditions, and continued economic growth. I believe 2025 was the real bear market year. The traditional 4-year cycle has clearly shifted. What should have been the bull run never fully materialized. Bitcoin made a new high, yes. XRP made a slightly higher high, but barely. A 10–20 cent move is not a real bull run. That's why I still expect higher prices ahead. Right now, bears are clinging to every negative narrative they can find because sentiment is weak and conviction is low. But historically, when fear dominates and everyone turns bearish, that's when opportunity tends to appear. There's a lot of noise trying to push one narrative, and I don't think it reflects reality. With that said, I hope you guys enjoyed this breakdown. If you did, drop a like, subscribe, and turn on notifications.